So this chart looks very, very messy, but I'm going to break it down and explain how we had probably one of the best managed trades I've ever seen, to be quite honest. And I know that sounds rather arrogant, but you'll see why as I explain. So first of all, we have this fib level. This should be very self-explanatory. We had the low and the high, and then we have our 50% to 61.8% levels here, which are obviously Fibonacci pullback levels or Fibonacci retracement levels. So through this level, we already had some previous highs, so that was a nice indication of some structure. We entered off this bullish pin bar we saw on the H1, so that was our entry confirmation. So I'll delete the fib so you can focus on the other things on the chart. And then what we saw was price continue to reject this 50 moving average as we were in drawdown. And obviously this was still within the fib level. So that was completely fine to hold in my opinion. It wasn't any reason to close out. What we also saw was previously we had this bounce off this gray line. Now the gray line is the daily pivot point. I've made videos on pivot points in the past, so again, I'm not going to go into these too much, but these are mathematical levels based on the previous day's price movements. They've been used on trading floors for many years. It's not some, hokey pokey kind of black ball or whatever you call it, one magic ball type stuff. So very reliable. So essentially using some data here, we bounced off, signaling that the market was overall quite bullish, and we maintained this sort of momentum to the upside. So let me get rid of that so it's a bit more clear. So what we did was eventually when we saw the fib level get hit again, so when we came from the low to the high and we saw price was around here, we moved our stop loss to break even, and that was just to protect the trade because at this point we'd reached previous high, and that's sort of a general rule is we were expecting either the break even to get hit or we plow through this level and create new highs. And that is essentially what happened. We did push through and create new highs. Now we didn't trail the stop loss anymore because there was no need to really. We were break even and I was happy to let it ride to take profit. And the reason is, if we look on the daily time frame, we saw this daily resistance. So this also lined up with the previous high, which again is why we moved our stop loss to break even. And the next thing was once we moved our stop loss and we would manage the trade, I sent a message saying we're going to extend our take profit to this 195.915 level. Now, a lot of people seem to target wicks and highs such as this. And I don't do that. I target the opposite. So I'll target the bottom of those or the high, depends on if I'm buying or selling. But you can see here it was the bottom. And the reason is because the hit rate goes up. If you're not targeting the top of the wicks when you're buying like this, then again, you can have a higher hit rate with take profits. And that's just a general rule that I've always set for myself that I don't do that. So you can see here that price came into this level, hit perfect, and we hit our take profit. Now this was timed very well because if we didn't hit our take profit right where we did, we would have been caught in this move and stopped out either stop loss or break even. Now this move was due to the Japanese elections, so obviously it's not really something we could avoid. We had to get out of this position, and fortunately it was well managed and it worked out very, very well. So what you can see is the signal here. Just so you know, so you can see we sent this trade on the 24th of September. I'm now long on GBJPY. The reason is the same as previous. So we already had a winning trade on pound yen, and I entered it again for the same reason. So essentially it was a central bank divergence. So we had the Bank of England hold their rates at 5%. We had the Bank of Japan sounding relatively dovish, essentially saying that they're not looking to hike their rates anytime soon, or they're not in a rush to hike rates. So again, you can see here we had the technical analysis I just showed you, along with this fib level as well. So we moved our stop loss to break even right here. So you can see again that's basically what I showed you, and then here is where we extended our take profit. So you can see GBP JPY is currently stuck on daily resistance. As our stop loss is break even, I'm extending my take profit to 195.915. If we are able to get price closure above the resistance, I see a clear run to my new TP level. Keep in mind it's high probability we see a rejection and a break-even trade, so feel free to secure your profits. Now the reason I said that is because this was obviously a very strong level of resistance through the daily time frame, and we were trading on sort of the 15 minutes and 1 hour, so it was quite high possibility that it wouldn't have worked out. However, as I said, there was reasons for the trade to work out, and it did. So then you can see this morning at 7 a.m., I sent a message to our members saying that we've hit our take profit perfectly. It's probably the best trade of the year, as far as I'm concerned. So an easy 3% there. There was very little to do here. So yeah, that was it. Apologies for my presentation. It's early and it's very cold in the UK. So I'm in an OD. But yeah, that's it. Just a quick breakdown. I will see you later.